market.
Okay, all right. Well, Deven, what do you make of this? The Paytm management, now they're making the right sounds. There's going to be a lot of overhang, though, with regard to supply. So what's your sense on the stock? It's what, less than a third of what it was, a fourth of what it was actually at its IPO price. What would you do with the stock? Do you believe the time has come to get in a little bit, or it's still in a void?
Hi, Nigel. Good morning. Well, I think as an analyst, I think my few questions here would be that I think this profit is basically talked about, I think either by way of changing the revenue model or by way of cutting the cost. I think which is the model, I think which the company is basically talking about. I think one would like to deeply understand that part of it, largely from the point of view of sustainability of the kind of profit that the company is talking about. Should it be increase or the change in the revenue model, and probably I think allowing them to increase the prices also at some point of time for the transaction services that they are offering. Also, along with that, I think the commission-based income that they are earning out of the distribution of products. If that particular thing is basically to be counted, then yes, I think it's more of a sustainable kind of a profit growth that one is talking about. But if it is only going to manage to the cost reduction pressure, then I think one will have the reservation on the subject itself. So till the point of time, I think we see the granular details. One would not be overly excited about, I think, the kind of profits that the company would make. At the same time, the amount of money that the company has invested by far, I would like to see how exactly I think this particular return comes, I think, after making the profit. So all in all put together, yes, it's a good news that the company is possibly not going to make more losses than what they were making. We'd like to see how exactly the things shape up on the business model side, then probably take a final call on the company.
Okay, well, you know, there's a lot of talk that took place at Davos, especially in the auto sector. So my colleague Shireen caught up with leaders from the auto space. Sudarshan Venu, the managing director at TVS Motor, who rarely talks, he said that electric vehicles is their primary focus. The iQube has been hugely successful. And Apollo Tyres vice chairman and managing director Neeraj Kanwar said energy prices are a big concern, especially in Europe. Listen in and we'll come back.
EV is certainly a major focus. It's really front and center for us in TVS. We've invested substantially in a range of new products for EV, ranging from scooters to premium motorbikes, three-wheelers, passenger and cargo, and also electric bicycles for the European market. So we have the full range of products which we have invested behind. We've invested over 1,000 crores last year, and we believe we will maintain this pace for the next few years.
1,000 crores every year?
But that's the kind of scale that we are looking to really build a full product portfolio, strengthen the engineering team, build capacity and roll this out over a period of time. And I think therefore our capex has really shifted away from ICE and in a share terms, much more in terms of EV.
We're grabbing market shares just because of the tires that we've come out with are good in technology. We are going after the ultra-high performance tires, UHP, so we're gaining market share in Europe. So capacity in Europe is 90-95%. As far as India is concerned, we are running at 80-85 because the CV cycle was down. Now we are seeing the CV cycle coming up in this quarter. Demand is a big concern, obviously. Energy prices is a very, very big concern. Availability of raw materials also is a big concern. So these are some of the challenges. I think supply chain was a challenge during COVID. Prices of freight had really gone up. They've started softening. So that's given us some ease on supply chain pressures. So yeah, I think it's going to be a difficult time, a challenging time. But I think we have to all look inwards, try and see how we can debottleneck, control our costs, control our overheads.
Okay, so those are two behemoths of the auto space talking about what's happening there. Deven, I wanted your thoughts on TVS Motor. So Sudarshan Venu, very optimistic about the electric vehicle growth. And of course, we've seen the success of the iQube. But the stock has gone from 650 to 1100 in the last 1 year. You think a lot of the good news is in the price?
Yes, Sanya. I would think that yes, I think to a greater extent, whatever the good news is in the near future, I think is already into the price. However, most importantly, I think the amount of money that is required to be pumped in to build the EV portfolio and eventually, I think, grow the size of the market and get the market share out of it, I think is sounding, I think, a very good task, actually, I think, from the point of view of the investors who have looked at, I think, these companies from last few many years. I guess I think it's a rebirth taking place as far as I think the business of the company is concerned. And maybe I think we are likely to see, I think, likes of TVS, likes of Bajaj, putting in significant amount of money in building the EV portfolio going forward. One will have to wait and see how much I think profitability it can produce in the near term. But certainly it's a good news that they are aligning their strategy with the requirement of the time, and possibly I think should give results faster than one has expected. Maybe 2024-25 could be the first year in which we could possibly see some major contributions coming out of the EV portfolio for many of these two-wheeler companies.
Deven, from yesterday, good morning, three names which made all the difference to the market, for the Nifty at least, was Reliance, which did well. HUL out of the blue ended about 3.5% higher. And then there was L&T, which was also up some 4%. Very briefly, any thoughts? What's going on? And near term, how are these three looking?
Yeah, Prashant, good morning. Well, I think more than anything else, I think the market is having significant amount of selling pressures coming in from the ETFs, particularly the foreign ETFs. I think who are basically paring their exposure into some of the large cap companies, and as a result of which these companies have remained under pressure. If you ask me in any of these three names, I think anything has changed fundamentally overnight, I would say no. I think most of the situations, I think for the Reliance or for Hindustan Lever or for L&T, I think remains extremely positive, and direction going forward remains extremely convincing as well. So from a perspective of buying the stock at a lower level, should it get hammered? Yes, I think one would like to buy the company into the portfolio, particularly the long-term investors would not miss this kind of opportunity when the fundamentals are appearing strong, and due to technicals, if the stock price is remaining subdued, pretty sure that I think this particular opportunity will not be missed by some of the large investors, because this company's promises to produce, I think, a return of 15 to 20% or even 25% from the lower end of the price. So obviously, I think the business of the company is bought into at lower price.
Okay, all right. Deven, I wanted to ask you about a couple of pharma names. You know, Eris Life Sciences, they've gone ahead and they've bought part of Glenmark's Derma portfolio for around 340 crores odd. So Eris, for Glenmark, it's a positive because it's part of their non-core offerings. However, for Eris, they have also cut their guidance due to slowdown in new launches. Any view on any of these stocks, or from the pharma pack, do you prefer something else?
So I think, on a happy note for Glenmark, I think they are realigning their portfolios. I think that is one positive thing that I would like to think about. And I think most of the pharma companies are basically rejigging their portfolios. They're trying to, I think, get into the product space where they are possibly getting relatively better margins than the commodity margin that they were up till now getting. So that gives, I think, a good amount of confidence. Maybe I think it's Cipla, which is basically leading the pack, Sun Pharma, which is leading the pack in the complex generics, and I think getting higher margins out from that side. So I think one can focus on few names and systematically, I think, build the portfolio in this kind of times for 15-20% kind of return that one would get out of it.
Okay. I wanted your thoughts also on some of these consumption names. Metro Brands, for example, I beg your pardon, reported a good set of numbers yesterday. It came in just during market hours, but very strong revenue growth of 25%, EBITDA up 22%. Are these names that you like?
Honestly, Sonia, we don't have the coverage on this company, so would refrain from putting any comments here.
Okay. What about something like an ICICI Pru? The value of new business went up almost 20% over there. In fact, both ICICI Pru, ICICI Lombard. Any thoughts on the earnings?
In fact, I think this is validating the entire analysis that we have been carrying out up till now, that the larger part of the income share that the consumer is getting is now getting shifted to, I think, the protection and insurance companies, particularly life insurance companies, and many of the private sector life insurance companies are basically getting a sustainable basis, 20% kind of a new business premium growth, be it Pru, be it HDFC, or even SBI. I think all of these life insurance businesses have been actually, I think, generating around 20% kind of a growth. So from that point of view, yes, I agree that I think these companies are remaining relatively more favorite as far as adding into the portfolio is concerned vis-a-vis previous years. In previous years, I think the new business premium growth was relatively less, and at the same time, the valuation was remaining high. Today, because of the time value correction, I think the valuations of most of the insurance companies have also come down to reasonable level. And that is where one is seeing opportunity for next 2 to 3 years as far as these businesses are concerned for investment portfolios.
Deven, names like PNB Housing, Manappuram, South Indian Bank, any of these strike a chord?
Honestly, I think we are bullish about the housing finance as a space in NBFC, and we like to remain with housing finance companies. Most of them, I think, are having the promises for building the business with a lending book growth of around 20% plus. Be it in case of PNB, be it in case of LIC Housing, or for that matter, even HDFC, in Bajaj Finance, housing finance subsidiary. All of them are basically showing relatively strong growth, upwards of 20% in the loan book and on a sustainable basis. So should this situation continue for next 3 to 5 years, probably I think these companies are relatively better placed today to add them into the portfolio for a sustainable set of return. I would prefer housing finance companies any day compared to the real estate developer companies, where I see the sustainability of growth in the business and the profit share after.
All right, Deven, just stay on. We'll come back to you in a bit. We have about 10 minutes left for the pre-opening rates to kick in. Before we slip into a break,